weekend all. Ira Epstein with your financial market wrap-up, and this is your weekend edition for Friday, the 8th of November, 2019. Now, we're just getting on about 3:27 p.m. Central Time, so these will be the settlement prices, and as we're talking, they'll light up again because the market stalls out, doesn't trade, between 3:15 p.m., 3:30. Then it reopens till 4 o'clock. But the settlement's determined at 3:15 p.m. Central Time, and this is where the market's finished. As we know, what we're all dealing with is President Trump impeachment talk. We're dealing with the president who is, if you watch today what he said, he has not agreed to a rollback on the tariffs that the Chinese say. But I think a lot of that's gamesmanship. And the reason it's gamesmanship, and he's right in doing this, is just think back to May. Our negotiators thought they had agreed on many points with the Chinese, and then the Chinese came out, and I remember reading it and writing about it, that no, we haven't done a deal in total, and when we don't do one in total, we don't have a deal. In other words, what we agreed to, all the parts didn't fit in, we don't agree to them. Well, so our president's saying, we learned. Once burned, okay, I can live with that. The second time, it's my fault. He's not going to fall into that trap. So what he's going to wait for is get it all on paper, get it agreed to, and then he'll go probably with the tariff talk. I think that's how the market is interpreting this, because if you look today, they tried to break the market, couldn't do it. The risk on is in place. So in other words, traders are buying stock indices as a group. They're dumping silver, gold. Copper was down today because it didn't like hearing that talk about, in part, the tariffs. But the other part is, if you look at China's economy, it's quite weak. Internally, they're quite weak. They're not doing what people think they're doing. So you've got to keep watching what they're going to do to shore that up. Energy market, I think, is looking beyond this, if you will, bravado on, no, we're not going to do anything yet on the tariffs. And it's saying maybe we're going to get some supply out of that there. And if you look at bonds and notes, interest rates are actually going higher. This is an inversion market. When they go down, real rates are climbing. And that's where I think you're at in these markets right now. Remember, on the weekend edition, what I try to do is do one monthly chart, and then everything else is going to be weekly, so we get a bigger picture of the market. Let's start off first with the E-mini S&P, the monthly area chart of only closes. This is the highest close on a weekly basis, period. It's a record. You can see what it's done. When you go to a weekly area chart, that was the monthly. This is the weekly. Same thing here. This is a new high weekly close. When we look at the chart now on the regular bar chart formation, you can see how this market's just working its way higher. You do realize we haven't had a lower low week in quite a few of them, almost 2 months, right? And the pattern has been one of higher lows and higher highs. That is bullish. I filter that by looking at moving averages. And the red is the 18-week moving average of closes. The green's the 100, and then I look at the 200. Well, the 200's out of play. These are the ones that are in play. Because there's no moving average over the top of the market, I look for other resistance points. Bollinger Bands are one of them. For those of you that work in the morning with me on my morning subscriber video, my paid subscribers, you know that we're going to use window envelopes as part of that, in addition to the Bollinger Bands. But right now, I'll put on for you the Bollinger Band, and you're at a resistance point. Markets trade typically 95% of the time within the bands, not outside of them. So when you get outside of them on a pattern that wasn't going sideways, and you weren't going sideways here, this is not a sideways pattern. When they're not going sideways, I'm looking at a market just pushing out the top. It gets a little ahead of itself. It pulls often back into it, supports back at the 29.78 level, and this market's still on a tear to the upside. Momentum is still up. I don't look at the slow stochastic oscillator, which is a momentum index, getting overbought or oversold the way I do on daily charts. In fact, on dailies, they can embed. I don't believe that that works in this theory on weeklies. I use them instead saying the market's either in an up momentum, down momentum, or sideways. This is an up momentum. I then go to the NASDAQ. Higher lows, higher highs. Last week, you got to that upper band, first time in a very, very long time, all the way since March. And again, you weren't really that much sideways. You could argue here a better story for sideways than you could if I came back to this chart, which I don't think it was. But I'm looking at a market still pushing itself out. I don't see anything bearish on that chart. The Dow playing catch up, hasn't quite hit the upper Bollinger Band. This week you got to 27,274 and the upper Bollinger Band's 27,769. So it's about 40 points away from it, but momentum up, trend up. What would break the trend is getting underneath 26,588. To break the trend in the NASDAQ, you got to get under the lower Bollinger Band. That's why I'm giving this one a little more importance. Then we get to the Russell. And the Russell is still in an uptrend, but this is what you call that sideways action. You see the difference? I mean, that's a pretty good definition of what sideways is. So I think you're at a big resistance point in this market at the 1613.50 level, and the high this week was 1613.60. So you can see you got right to it, and the market sold off about 20 points from that. Little different action. Still bullish. I'm not saying it's bearish. I'd be looking for support if it decided to pull back in between the 100 and the 18-week average of closes. In order to break the uptrend on this pattern, you got to get all the way back under the 1459 level. In the VIX, you're riding the lower number down. So this is still very bearish. The market was sideways and still is somewhat, but it's now broken with these numbers under all this. So it's just pushing on it. Remember what I said, you come out of those sideways tight patterns and sometimes you just lean and run on that Bollinger Band, and that's what you're doing. Momentum down, trend down, just riding it to lower levels. In the 10-year note, what do we have? Well, if you really take a look, this week's low took out this. So you have a higher high, a lower low. That's not a trend. The market has shifted its bias to the downside. If you look at last week, you finished at 130, that's 130.00.5. So you were over that 18-week average. This is the first time you're under it, and that shifted the bias for the first time. Where might the market go on that? Well, number one, I don't see a trend. But if it just keeps with the momentum, maybe the lower Bollinger Band. I'd like to actually see, as a chartist, the market come back to that 18-week average and fight there and give us a new pattern. What killed the market? I want you to look at an outside week up. That's what this week is. When you take out the low of an outside week, I look for the market to go to the closest moving average that I'm plotting or the Bollinger Band. That's why I say those two could be in play for each other. In TLT, what we have here in this market, we had that outside week to the upside. We take out the low here. That kills everything. You're back through these lows too. So now you've got lower highs, lower lows. This chart's more bearish than the others that we've been looking at on interest rates. Will you make the run to that lower Bollinger Band, 129.29? That's 5 points away. It's a big move in this market, but that's the target. Resistance level back up at 139.79, and the chart would get very nasty looking if you took out last week's high. In the dollar index, the battleground is the 18-week moving average of closes. You don't see this on the daily chart. The daily chart looks like you're just running to the upside. The weekly chart's a very different picture here. The weekly chart is just telling you battleground at this 97.80 level, the 18-week average. You fought against it now 4 weeks in a row. If the market rallies, the 99.11 area is the resistance. The trend is down because you've got lower highs, lower lows, but because you closed over that 18-week average, they negate each other. The trend and the bias knock each other out. And then I look at momentum and it's still pointing up. That's why I'd read the chart. Eurocurrency, flip-flop of the dollar. Battleground's been for 4 weeks against the 18-week average, and it's the flip-flop. You've had higher lows, higher highs, now you've given that up. So they're fighting each other. If you go to last week, you see this market finished at 111.94, well over the 18-week average. So now you're back under it. Where are we going becomes the question. While the swing line is up, the bias is down, they knock each other out. momentum is down. In the Mexican peso, the trend is up. You have higher lows, higher highs. The market has stalled out against and finding support on the pullback right now underneath it at the 100-week moving average of closes. Even if it gives ground, it's got support between that and the 18-week. And should this market decide to take out last week's high, which was 52.19, then I'm looking at the potential for this to be another low. If you clear that, maybe you're going to the upper Bollinger Band area. That's something you could be looking at. Canadian dollar, just sort of sitting here right now at this 18-week average. It fell back last week. It had that big reversal down, made a lower and low this week, settled 75.61 under the 18-week. But the chart pattern is a lower low as measured by the swing line, higher high, ran into the resistance at the 100-week average, pulled itself back here. I'm going to call this chart neutral. In the yen, this is, I use the term on the daily charts at times, called an ugly chart. Let me define that for you. Ugly simply means I can't find a pattern on it. Everything's a mess. That happened when we had an outside week up. We took out the low. Then we had bounces like this with another. I want you to look. Another outside week and you took out the low again. So you've met your downside target. You hit the lower Bollinger Band. Remember what I said, if you take out the low of an outside week up, I'm looking for the closest of a key moving average or a Bollinger Band. I've gotten down to support levels here. That's all that it is. And I can't tell you what the trend is. I can see the trend. I can see the market's down, but that's not what I do is on a chart. In Bitcoin, you've got a lower low, higher high pattern. That is not a trend. What would set up a trend? You know, if we were holding a live webinar, which I keep saying I'll do, and I'm so busy I haven't done it, here's what it would be. Take out 10,050, and you could have higher lows, higher high, putting into play the 12,000 level. Without that occurring, you keep running into the resistance right here, and you don't have a pattern. You have a lower low, higher high. In Brent versus WTI crude, as long as you stay underneath this 18-week moving average, which is now 565, the bias is down, and it says the spread differential between the two, the odds favor them getting smaller. That's the way to look at it. So WTI is catching up in price to the Brent. Now, in the Brent, we've got this obvious question as to December. Does OPEC do anything about the production cuts? Do they keep them going? Do they put more enforcement on Nigerian countries like that haven't been doing that? Do they say that they're going to go beyond the March timeframe? There's a lot of unknowns. Then we don't know how China and the U.S. are doing in this trade talks. Every time we hear it's good, you get a pop in this oil, and that's what's been happening. Think of the talks that we've had recently. They're better, not worse. We're talking of not putting on December tariffs again, December 15th, maybe pulling back on the ones that went on October 15th. There's a lot there to be talking about. But world economies aren't strong. So it's more of a situation of supply than I think demand. I don't think this is a demand-driven market at this point. So when I look at the chart, I then look at what do I see there? Well, I've got a higher high and a lower low. I know right off the bat I don't see a trend. What I see is a market that's developing sideways action in the Bollinger Bands, and even momentum questionable. It's trying to point up. The bias is certainly up on the close. You finish 62.62 over the 18-week average, but I don't have a trend here. Now, we've been for 3 weeks up to that 18-week average and just sort of hanging there. What about WTI? You even see the sideways action better here. You can see it is crystal clear. This is a stronger looking chart, and that's what the spread between the two is telling you. Why? You've got higher lows, higher highs. That's an uptrend. The bias is up, and momentum is up. Therefore, maybe this is the area that's coming into play. Support's back at 55.63. You'd have to go under 52.39 under the current formation to turn the chart bearish. You can lose the bullish biasness if you closed under 55.63, about $1.50 lower. In gasoline, once we set up, and I'll take this off right here, this is where we were, higher lows, higher highs. The 18-week average is the likely target. Again, that line in the sand. Market gets up, fighting its battle there, and it's still fighting it. If it were to close over the 168.27 level, well, that would get me the momentum to the upside, the bias, let's call it. Momentum's already up, and the trend is up. What breaks this whole pattern? Taking out 157.97. Is anyone in control of the market? No. Not the way that I teach charting. In the heating oil, you've got a higher high, lower and low pattern. Right off the bat, I don't see anything. Then I'm looking at how this market's swinging, and it's doing quite a bit of it against this 18-week average, that line in the sand. It has not been strong enough to pop to an upside Bollinger Band top or the downside, and momentum is sort of just drifting on you. Don't know what to do there. So you put it all together, you're looking to see what goes on, and I'll be looking at natural gas. Again, 170 cities or regions, the USDA is saying, and the Weather Service, could see record lows come Monday. And yet, all you put onto this market was $2. And I was thinking on the way to work today, we were 14 degrees in Chicago this morning. This is November 8th. We're normally 50, 35 as a low, that type of number. Interesting time. I talk this way and a lot more in the mornings when I'm doing my morning subscriber video. That is where I'm able to say, I want you to buy here, I want you to sell there. Do I do it every day with a new trade? I don't. But you'll see me coming at them. This morning, for example, I think I had a trade recommendation in these videos in all the stock indices. So today didn't bother me. Today was one of those days where I was looking for things to do in them, and I'm not going to tell you what they are. That's why my subscribers get it. I'm going to cover 40 charts, 5 ETFs. I get up and I'm recording before 6 a.m. I have this in your hands before Chicago time, Central Time, 7 a.m. It would take a computer breakdown for that not to happen, or me being sick. So far, neither of those are going on. I'm going to cover the markets each and every time in this way. That means that when you're on our website and you look at the video, for example, as you pull the scroll bar of the video, it's going to light up and say metals, meats, grains, energies. You can get where you want without having to worry, where is he in this video? That is the idea, saving you time, but at the other hand, I'm teaching. So you might want to watch the whole video. They'll average about 20 minutes long. There'll be a lexicon on the side here, just exactly in that sequence, so you can either hit that or pull your scroll bar to get to it. It's also part and parcel with my subscription you're going to get for your phone. I don't care if it's an Android or an Apple, the iOS as we call it. You're going to get our application so that when I put out my videos or my recommendations, a lot of people buy the whole recommendation package. If you do that, you're going to get a push notification. Why should you pay for a text notification? If you just download that, it's going to be push. You hit it. If it's written, you're going to see it. If it's a video, it comes right up for you. Can it be easier? I don't think so. And it works everywhere, folks. So all you got to do is go to our website to find out more about this. Go under the word research. You'll see it all there. You can click up here. It'll take you there as well. But the idea is to get you started in the morning, to tell you what I'm seeing and bring you up to date at that point. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.